This is more of a logical point, and I get some flack for this because these news stories of different countries looking to bypass the dollar in international trade and gold bugs get really excited. And again, I don't want to say that it's worthless news or that it's not significant in any way. It is, and I'm not ignoring it. But what is happening logically in a pyramidal monetary structure like we have now is that, let's say, when China and Brazil make a deal over gas, okay, we're going to use the yuan to buy gas instead of dollars.
Rafi Farber explains the true value of gold, arguing that it's crucial for countries to use gold and silver instead of dollars to escape the current monetary system. He predicts gold could reach $60,000 an ounce as economic instability grows and fiat currencies falter. Farber discusses the unsustainable debt pyramid and the inevitable shift to real assets as people lose faith in the dollar.
So what do? What they're doing is they're using the yuan to settle a dollars-denominated trade. It's a nominal difference. It's still a dollar deal, just settled in yuan. And then what happens to those yuan? They're eventually exchanged for dollars, so whoever the yuan is going to can make another dollar deal. This is unavoidable in international trade because the international trade system is based on the dollar, because of the pyramidal structure that's left over from Bretton Woods, right? When Bretton Woods had content and dollars were redeemable for gold, the idea was the United States could siphon the wealth from other countries. They would encourage other countries to hold dollars instead of gold, and their reasoning was like, oh, well, if you hold gold, it could get stolen if Germany invades again or whatever, another world war breaks out. Remember, this is right post World War II. And America just saved the world, or whatever the narrative was. So they're like, okay, so instead of holding gold, hold dollars. We'll hold your gold, and then we'll redeem it. If you have $35, we'll give you an ounce of your gold back. So don't worry about it. Just trust our currency. And then Nixon, there was a pyramid. There was gold in it, and then Nixon hollowed out the gold and left the pyramid structure. So in the pyramid structure that's empty and hollow now, the dollar is still the base of it. So there's no escaping that. The only way that a country can truly get around the dollar is not by going above it in the pyramidal layer. That doesn't make sense because the upper layers of the pyramid are supported by the lower layers by definition, or else they'd be floating in the air and they just fall over. So the only way you can go beyond the dollar is to get underneath the dollar, not above it. And the only thing that's underneath the dollar is gold and silver. So if you have two countries that are trading goods denominated in gold and silver in ounces, they're not making a dollar deal. They're not saying like, I'm going to buy $100 million of ag gas for you denominated in gold. That would still be a dollar trade, even with gold. What they would have to say is, I'm buying 100 ounces worth of gas from you, country B. That would be getting around the dollar. And they're never going to do that until they have to. Until the dollar collapses, they're not going to do that. And when will the dollar collapse? When it's attacked at home by the Americans in the street. And therefore, from that core, they will not be able to do any more dollar deals because nobody will want them. So it's always tempting to build a story about short or medium-term movements in gold and say, well, this happened, so therefore Y happened. And sometimes it's true, right? But it's more often not true. So it could be that people are looking for a safe haven, so they escaped the dollars and went to gold. I don't know why gold is moving exactly why it's moving now. I just know that inevitably it's going to head there. It's going to head up and up and up because that's history. Now, the question is, so why am I so focused now and saying that saying that it's going to head to 50% backing of the dollar, 100% backing of the dollar, which would be like $50,000, $60,000 an ounce eventually. Why am I saying that now? Well, because you have these like massive gargantuan piles of money in different pockets everywhere. And it feels to me that one more financial crisis, the Fed's going to have to print like $10, $20 trillion just to touch the exponential curve of the debt pyramid, right? It has to go in an exponential curve because the more people that are in debt, the more debt they need to raise in order to stay in business and to stay servicing their debt costs. So it's an exponential curve that just feeds itself, and we're already going vertical. So it seems to be that one more crisis is going to do it. Exactly when this is going to be triggered, I don't know, but it seems like, first parts of it already have been, and we're just waiting for like a big flood or the big bulk of it to like reveal itself. And that could happen anytime now. So get ready and don't worry about short-term movements right now. It's not important. That should be the point. We're headed back up in consumer prices, and we're headed back up into an environment where the Fed's going to have to cut to zero in order to save a bunch of banks. So if you have that combination where the Fed has to cut to zero and restart QE in an environment where consumer prices are already rising furiously, you're going to be in an environment where it's going to click. And the public is going to start to recognize that this is never going to end, and they've got to get out of dollars or lose all of their savings.
Rafi Farber argues that the US dollar's dominance in international trade can't be bypassed by other currencies like the yuan due to the legacy of the Bretton Woods system. He believes that only trading directly in gold or silver can bypass the dollar, which won't happen until a domestic financial crisis collapses the dollar. Farber predicts such a crisis is imminent, driven by massive debts and necessary money printing by the Federal Reserve, leading to high inflation and a shift to tangible assets like gold and silver, potentially pushing gold to $60,000 per ounce. He sees this shift as inevitable due to the collapse of the current fake money system.
And some, the smart people are going into gold and silver now. The people that are not aware of this, because most people are not, they're just going to buy whatever they can get their hands on when they realize that they need to. And that'll be whatever they can find first. Gold, silver, food, furniture, whatever. That's the hyperinflationary point. So that's what I see next. And when it happens, I think it's going to happen very quickly. And I think we're very close. Fortunately or unfortunately, depends how you look at it. I see it as fortunately because I want this to end. And I see it as inevitable, and just let's get it over with already and peel off the Band-Aid. And unfortunately, for those who have no idea what's going on and they'll only find out at the last second. There's still a lot of extra money out there that funds and hedge funds and whoever manages money, the big players that really move prices, they got to put it somewhere. So they're putting it where their algorithms say to put it. And there's still a whole bunch of hangover money from the lockdown printing era, and it's got to go somewhere. So that's where it's going. I mean, I don't really subscribe to the view that the stock market and the economic news are related in any tight correlative way. Eventually, economic news is going to push stocks down because people are going to realize that, everything is falling apart, and stocks are, even if they're going up in value, they're going down because inflation is going faster, and they've got to go into real assets, and that's going to happen all at once. So this looks to me like the extra sideline money is just being sucked in, and we should stop paying attention to like these short-term waves and trends, and things will go up and down until they fall, and that's where we're going. Let's put it this way: the gold and silver people, I'll just tell my story, like how I came to it. Like, there were certain things that made me very uncomfortable with how the economic system supposedly worked that, I kind of said, I don't like that, and I tucked it away. And I said, I'll solve it later because I don't really know now. So I tell this story a lot. When I found a 1,000 shekel bill in my father's office drawer, now, I knew what a shekel was. It was like about 3 shekels to $1 at the time I found it. And I'm like, you have 1,000 shekels in your drawer. He's like, oh no, that's the old shekel. It hyperinflated to zero and now it's worthless. So I'm like, money always inflates and prices are always going higher. He's like, yeah, but that's how an economy grows. I'm like, what? You just said it died, but now it's growing. What? I didn't get it. I was like, okay, whatever. I don't understand. I'm like a little kid. And then the second thing I didn't get was like in economics class in high school, they were talking about how the dollar used to be gold, but now it's just fiat. And I was like, what's fiat? She's like, well, it just has value because the government says it does. I'm like, well, what if people don't believe the government? Like, how does that sustain us? It was like, what? I was like, okay, I'll just put that on the test. Like, okay, fiat means government says that. But like, what is this? And so when you see that the other problems, and then you go back to the foundation, you find out that it's empty. It's like, okay, you gotta go in the other direction and fill it with some content that isn't part of this system because the whole base of it is emptiness. Literally. We all have a gut feeling deep in our souls that fake money is bad and real money is good.